What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for September 8th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for that day in the week ahead in this phenomenal market, which we are currently residing. But being said, state of the market, things aren't really making a lot of sense. Just in general, a lot of different cues that you potentially would have had before are making sense. The dollar is skyrocketing, oil is falling. There was a lot of different issues going on. Oil, particularly, are talking about capping oil, which is causing it to plummet. Although the dollar is still skyrocketing, Europe is struggling, and we are a partridge in a pear tree. So, what matters? In my opinion, there's tons of data, there's tons of Fed speaking, but none of that matters. There is some very weighted information coming out. We've got the ECB rates tomorrow, along with Powell, and we do have our core CPI coming out next week. So a couple takeaways from today. Today we did have the beige book as well. That didn't really have a whole lot in it. It did, I think, help the market push some, but as you can see, the move already happened essentially before the beige book even came out. But with that being said, the report essentially was saying that, everything is still really bad, and the market is going to take that as a positive sentiment, because that means that the Fed could potentially dial back. Now, a lot of Fed members today were asked about specific rates for September. None of them would answer, which is very interesting because of the fact that they are more than happy to disclose what they feel the next rate raise is going to be. So with all that being said, we come into tomorrow. We got the ECB. We already know their inflation is at all-time highs. We believe they're going to come in at a 75-point basis move tomorrow. And then shortly after that, that comes at 5:15 Eastern. Just double checking that. Find out EA or ECB tomorrow, bright and early. And then what's going to essentially happen is shortly after that, ECB is 8:45 a.m. And then we got Fed Powell at 9:10 speech. Now, this particular speech, I don't know what exactly he's talking in. If it is a pre-recorded video, it's not going to hold any weight. If it's a particular setup in which he is speaking in an open forum, you are going to get swings in the market. Right now, we are still assuming that 75-point basis is essentially what is going to be on the chopping block come the end of the month. But it's really going to depend next week on Tuesday with core CPI. And if we see a huge drop in core, if we see a huge drop in core, we could potentially dial back. It depends on how much of a drop we get. That is what really matters coming into next week. Now, the market is taking the weakness in the report as though the Fed will dial back. And so there could be a potential rally here. Something when I was talking about this pullback, when we hit this massive rally for earnings here, I'll pull this up on the daily, you can see it better. We had this massive rally essentially going into earnings. Then I said, this is going to be the drop that you're going to want to watch. We did hit that zone, and it barely tagged it and bounced straight out of it. Ultimately, in any good trade, that's kind of where you want to be grabbing before the bounce. But the thing is it can assume a lot, but if that core inflation is not down a lot, I still assume the features and everything are still pointing to a 75-point basis move. I think they will continue to front run it again. Um, Anything is possible if the core inflation does come down dramatically. I think the market could potentially rally, and this could be potentially a higher low here, and we could start rallying uh, going into the Fed meeting. Now, depending on how much of a difference it is, that could really dictate how much of a rally we get. Maybe we rally back up to the trend line, only to find the Fed, and then kind of take it from there. If they do dial back, we could break, and I think we could really go nuts. I think the market could potentially go nuts towards the end of the month. Right, we're going to get back into earnings mode. When I say earnings mode, I'm really just talking about big tech. The rest of the companies, in my mind, don't really matter so much. We've gotten the market has been normalized, so a lot of these stocks that were at ridiculous numbers aren't trading at PEs that they shouldn't be trading at, and we're going to continue to see that for the next couple of years before the next crazy push up. But nonetheless, ECB tomorrow and Powell tomorrow. What are we going to get in the morning? I think that will dictate the market to some extent, potentially reaching into next week. But ultimately, the core next week is what we're setting up for. We have to be mindful of that. I'm still bearish in a sense short term. Again, I'm neutral for the most part because I don't want the market to run away either side. I think for us to make a new low to break 36.36, I think we really need some kind of new catalyst. And something I've been talking about, there's been some catalysts that are brewing as far as energy in the housing sector. But when is the timing for those is the real question. ECB is going to be a challenge during the winter. Mortgages, the housing sector, it really depends on how much more. We've already come down quite a bit. I believe it was currently sitting at like 30% nationwide. It's come down, it's pulled back some. I can see it pulling back even more if the Fed continue to pile on the rates. Now, even if they dial back a 50, it's still 50 points is still a lot. You have to understand that we came from nothing to 50, to multiples, to 25, 50, 75, 75, maybe another 50, maybe a 75. It really just depends. Again, the last thing the Fed want is this thing to run away. And so they'll do whatever it takes. And we will uncover what Powell's cryptic message of feeling the pain really is. Was he just saying that to keep people essentially in check, or is he actually being meaningful of it in that we're going to get another 75-point basis move? Now, if for whatever happens and he comes in with a 50-point basis move, you better believe the market is going to have one hell of a rally that you haven't seen in a while. And this is why these particular events weigh so much, because what is said and the actions taken is going to push this market strongly in one direction. Now, to the downside, I think even to the downside, you only got so much downside at this point. I think you need a new catalyst to create a new low, whether that is some sort of energy crisis that causes something out of left field, or the housing sector just crumbling because of bankruptcies. How much longer do people got before bankruptcies start rolling in is the question. So that's what we have to look and what we have to see. So technical wise, we're kind of sitting at a support here. The market needs to hold essentially above that 4K mark. If you can't open above that, we haven't retested this, essentially the 40-50 mark. I think if we do get some sort of a rally potentially tomorrow, the 40-50 is going to be top. We're going to get a hard rejection off that. They're going to be a turning point to keep selling. I think the way it's playing out, we'll potentially hit this by Friday or Monday, and then we'll pull back and potentially could sit roughly right here, waiting for core. And then core would dictate if this is a higher low or not. If it's core is bad, I can see this selling back down and then try to hit around that 50-point basis move. If it's good, I can see this thing breaking out and at least retesting that trend until actually monetary policy comes out at the end of September. So that's what I am predicting for the next coming weeks. Again, this was a pivotal drop here. I want to really see how this holds up. Again, it could sway either way very quickly. But as far as the downside, I think you're capped on the downside at this point unless you get a new catalyst. Otherwise, we're going to just continue to chop and play this junk until there is some actual positive news or some really left field news that causes this thing to break 36.36. Now, talking about Bitcoin, Bitcoin's at a support. It could be a double bottom here, but it definitely needs to hold this 18,700. If it can't hold the 18,700, right, we're going to see some pretty low lows, in my opinion. I think it's potentially would see even 12K. At that point, if the market breaks that 36 level, you're going to see panic, and you could potentially see this under 10K, I think, at that point. But we need to induce panic, I think, to be able to see those levels. We do have some, like I said, some catalysts that could cause that to happen. But we have to wait and see. It's all about timing. If those catalysts don't come quickly, this thing could rally off of good inflation numbers, and then those catalysts would hit, and then we would just make a higher low from that point, in my opinion. So we have to really see. BA, again, still setting up for the downside, in my opinion. Not saying it can't run up, but it still needs, at least, in my opinion, one more leg down to really make that higher low, solidify a more of a bullish rally here. But we have to see. Again, it's holding this 150 mark pretty solidly. Could drop to 134. I think when the 134 would be a good higher low, and go from that point. But again, it's all very heavily dependent upon core CPI. What comes tomorrow? People are going to be scared of a 75-point basis move from the EU. I don't think the U.S. market really cares, to be honest. It's not new news. They're aware it has inflation. I don't think they really care. But to be honest, it's going to affect us later on down the road. And maybe that adds more fuel to the fire for a potential downside move when one of the other black swan catalysts come to fruition. So banks doing really well. Again, the talk about things being bad, right? That just means that rates will dial back. People will go out and spend more. Potentially, I'm not saying it is. That is just what was predicted in the beige book today. So any bad news in the beige book is essentially good news for the market, because that means the rates could dial back. And so that's the way the market's interpreting that thus far. Again, you're going to need overnight digestion. And then before market starts, you're going to have a lot of new data, new catalysts that are going to drive this market. So banks popped a little bit. We really want to see if banks could break back over the 117 mark and then go from that point. Goldman Sachs is still, it looks like a retest. This thing looks like it wants to break and sell off pretty heavy. Needs to hold 322, but we'll see what happens there. And BAC, same thing. Break, retest is what it looks like. A lot of these look like they're getting ready to sell off. This is just a retest. Maybe we just got a relief bounce. Could be a strong possibility leading into tomorrow, but we'll see. Again, we're not going to predict. We're going to wait and see in the morning This is why I do morning calls. And if you don't follow me at Hemi137, I do morning calls each and every day to get you prepared for the day. So that's pretty much it. I'm just going to go over the basics, and then we'll see what tomorrow brings. So if you made this far, go ahead and drop a like button. Until next time, I'll see you guys later.